One other company that's on the radar and has got a couple of aggressive buy calls as well coming out on brokerages is Gulf Oil. They seem to be growing quite well, growing at double the pace to the industry, increasing market share. They're focusing on new businesses and a lot more. Manish Gangwal, Chief Financial Officer of Gulf Oil Lubricants India, joins in. Manish, good morning. Thank you very much for joining us today on the show. You seem to be on a fast track with Gulf Oil. Your core lubricant business is growing at double the pace of the industry. AdBlue is also doing exceptionally well as we see it. And the industry as whole is growing too. So it's, of course, two things working in your favor. Let's start with core lubricants, right? What is the anticipated growth that you are working with over the next, say, 3 to 4 quarters? And also, where does your market share stand today in core lubricants, and where do you see that at the end of this financial year and at the end of 3 years?
So, good morning to all of you. First of all, thank you for having me on your channel. Yeah, you are right. We have seen a very good growth coming back post-COVID in terms of the lubricant sector, and for Gulf Oil, our company especially, where we have been, traditionally we have been growing 2 to 3 years the market growth, and that has been the trend for last 10 years. We have continued our journey even on a higher base of growing 2 to 3 years the market in terms of volume. And for that matter, the Q1 performance has also come very strong at 9% revenue growth and 29% PAT growth on the back of 3 very good quarters in the last year, where we hit centuries of EBITDA in the last 3 quarters of last year. So overall, yes, good traction coming back to lubricant sector, and as you rightly mentioned, the lubricant sector is going to continue with, we have been telling, and some of the global experts have also been echoing our voice that yes, the lubricant demand is going to continue for the medium to long term, and it's while there will be certain decarbonization efforts in certain segments, but overall the demand for lubricant is going to continue to remain at this 3% volume growth level, which has been the trend for last 10 years. So overall, yes, the positivity in the sector is back, and of course at Gulf Oil we have been doing continuous work on increasing our distribution for B2C, gaining new customers in the B2B space. So overall, yes, we are doing better than the industry towards, and our market share also currently is roughly like 5-6% overall on the lubricant core lubricant side. So we have a lot of headroom to grow our aggressive trajectory of 2 to 3 years market. So the market share at 6% gives us a lot of headroom as well.
Right, yeah. And where do you see that market share go up to? Manish, I understood the point that the industry is growing despite decarbonization. You're growing at double the pace. From what I get is your market share is in the range of 7 to 8%. Where do we see that grow in 3 years? And also, what are the margins you enjoy in this business? Is it strong margins? Is it on the upper band? Is it more of a revenue-focused business? Give me an understanding of the kind of business core lubricants really is for Gulf Oil.
So overall, as you said, we have a 6% market share on the total lubricant side, but we have pockets of growth where we have less than 5% market share. For example, in industrial segment, for example, in passenger car segment. And these are high growth focus areas for us in terms of premiumization, in terms of moving the curve ahead. And overall, in the Bazaar segment, which is the lucrative, brand play segment for B2C, where you have, more than 200,000 shops across semi-urban, urban India, there we have slightly higher market share of around 7%. But that said, we have a lot of headroom, and growing at 2 to 3 years the market, we have been getting market share across, and we continue to aim. Last 10 years, our market share has more than doubled. And we believe that the journey of gaining market share, continuing to gain market share, continues for next 5-10 years for us, because there is a lot of headroom. And of course, there will be selective pockets of special focus, like I mentioned, passenger car, and infrastructure is also growing significantly in India, and the government spending on infra is going to continue for next 10 years. And there we have a very good market share, and we want to consolidate our position further. So there are many areas of pockets like agriculture segment, where we have again sub 5% market share. and rural is doing well now. So all these areas are high focus areas for us for overall lubricant growth in terms of trajectory for the next many years.
Manish, I know that data center and cooling liquids is a segment you ventured into, and you're looking at a strategic long-term growth map there. From what we understand, the capacity that India holds in terms of data centers is only 3%, so the room to grow is significant. Tell me, what does cooling liquids do in terms of your top line, in terms of contribution? What is the growth you're working with there, and what is the sort of margins you enjoy here? Because these are new businesses, right? And the potential to grow is so much more, largely because there's a very low base here.
Yeah, so you're right. Data center has come up as a good opportunity in the recent past, and considering India's focus on AI and thereby creating a lot of capacity for data centers, it's an interesting opportunity. But let me tell you, like we have been highlighting earlier, also this is an opportunity which is a very niche opportunity. Overall volume of data center cooling liquids, because currently most of the data centers are air cooled, and when they transform to liquid cooling and assume that 100% of the data centers are on liquid cooling basis technology, we are still going to talk about around 1 to 2% of the total lubricant volume coming out of that sector. So it's a very small segment of the overall pie, but it's a good segment to be in because it's a growing segment. And at Gulf Oil, we have been continuously working on creating some good products for this segment. But right now the opportunity is very small.
Mr. Gangwal, hi, Tamanna here. Just so data centers is niche, it's new, maybe something in the future. You're also looking at EVs as one space. Give us a sense of the size of that business and how much of a component or how much requirement is there for the product in EVs. Is that growing? Give us your overall look there.
Yeah, so I think while we say that lubricants are going to continue to grow, what the growth rate has been for last 10 years will be for next 10 years also. At the same time, we also believe at Gulf Oil that there will be certain areas where EVs will take certain portion of the market, and especially in the two-wheeler segment and bus segment, there will be some penetration of EVs going forward, which is good for environment as well. And with that thought process in mind, we have made few investments in EV space, and we have made an investment in a AC slow charger company which is based out of UK. We have made an investment in a software as a service company which caters to electric vehicle segment named Electrify. And another recent investment last year we made in November was in a company called Tyrex, where they make DC fast chargers. So we have made few moves in the sector. These are growing segments, and we believe that especially the DC fast charger segment in India is going to grow rapidly because there will be the government buses, STU buses, which are going to be converted to EV in certain proportion over the next 5-7 years, and they all require fast charging. And Tyrex is well suited in that place. Tyrex currently have more than 1,000 fast chargers already installed and running across India. And all our products are highly successful, and that is where we believe that Tyrex as an opportunity in DC fast charger segment can be a very significant opportunity for us. We believe that the market of fast chargers by 2030 should be at least $1 billion plus, and that makes and with 8 to 10%
Mr. Gangwal, so the EV play of it, which includes fast chargers, all of the paraphernalia around it, what is that going to be in terms of contribution to your revenue going forward?
Yeah, so as I mentioned, a $1 billion plus opportunity by 2030, and we aim to have at least 10% market share. So we are looking at roughly 500 to 700 crore of top line at least coming in next 4-5 years from this charger segment.
Yeah. You come from an industry that is rather fragmented, Mr. Gangwal. Any sort of inorganic plans that you have, any acquisitions, mergers? Because you are going into new businesses, and the fact remains, while you're significant in the old business, the future really sits in the new business place. Are you eyeing any sort of mergers to sort of achieve that target of 10% of $1 billion?
So overall, we keep looking at EV value chain across categories, and we evaluate regularly the opportunities which are coming either by way of partnership or by way of acquisition. And in our core lubricant segment, we generate a lot of cash, and the cash is being planned to be utilized either by way of investing into the upcoming EV segment, which, as I mentioned, we are aiming at 5 to 700 crore of top line in next 4 5 years. Or obviously, we have increased the dividend payouts as well. So yes, we are closely evaluating battery swapping space in terms of EV or other EV value chain opportunities, because we have a strong brand which auto consumer knows. So considering that in mind and our relationship with OEMs, auto OEMs, we are continuously evaluating the space.